This is probably one of the hardest gold trades I've taken in a while. Not because the setup wasn't clear, but it's because the price action was really messy this week. And from what I've seen from your messages, a lot of you guys got stopped out before the actual move happened. So you guys have asked me to record a breakdown of this trade, and that's exactly what we are going to be doing in this video. I'm going to show you why I stayed bearish and why I did not decide to close this trade even when price pulled back. So yeah, let's get into the video. So if you follow me on Instagram, you would have seen that I posted this post last week on Sunday. This is exactly what I'm going to be looking for next week. We have this higher low right here. It's a higher low because it's higher than the previous low. Then we have this lower high right here that was created because price failed to break above this point. Failed to break above this point, came back down, created another higher low. So for me to keep holding the buys that I entered last week, I would like to see price give me some sort of an indication, a correction, then a push to the upside. But if price ends up failing to break past here again, I'm going to be looking for some sort of indication, wait for a correction, which will then mean I'll have to close these trades and take sales from under here or under here all the way to back down here. And as you can see from that video, I told you guys I was holding buys from here, which this was my entry when I entered buys because I was expecting price to give me a good push from here all the way to up here. So when the market opened on Monday, it ended up hitting my stop loss because my stop loss was around here and my entry was here. And I posted this screenshot to show you guys that the buys have hit stop loss, which was okay because now we had an indication to the downside, showing us that we shouldn't be considering buys in any way, shape or form. Because as you can see, we have a low, we have a high, we have an equal low, we have a higher high. Price came down here and it created a higher low. But when it tried to come back up and create another higher high, it failed. Ended up creating a lower high. This is a lower high because this high is lower than the previous high. And then market opened Monday morning, price ended up breaking this higher low that it had created, giving us an indication to the downside. This is an indication because price ended up breaking this low that it had created. So when price ended up breaking this low on Monday, that clearly showed me that buys were off the table. So now we have an indication to the downside, showing us that we should be looking for sales. So if you trade ICC, you know this is the first part of the three-step process, right? We have an indication. Now we have to wait for a correction. And price ended up correcting on Tuesday. This right here is our key level because this is where price broke structure to the downside, giving us an indication. And this is our target because this is where the next level of buyers are sitting. So price gave us an indication and we have a correction. If you go to the 1 hour time frame, you'll see way more information than the 4 hour is giving you. We have our higher low and then we have our lower high right here. Price ends up breaking the black line, giving us an indication to the downside. This happened on Tuesday. I think this was CPI. Price ended up pushing to the upside, giving us a correction. And once price came back below this black line, this should have been my entry. And for everybody asking me why I did not enter when price came back below this black line, this is because CPI had just happened and I was waiting to see how price reacts after CPI. Because as you can see, we have all this bullish movement coming into the market, which ended up being our correction, which is okay. Price reached this point, it stopped, which means this is a good level of sellers. So I marked this level out. Normally, this would have been my entry according to my strategy. But because CPI had just been released, volatility was still very high. So I decided to not enter at this point because I'd rather miss a trade than enter during unpredictable price reaction. Price ended up coming right back above our key level, right? And then when it came back above our key level, it still created another lower high. So if I was to mark this out for you guys, we have a lower low, we have a lower high. Price came down here, created a higher low. And when price came back up here, it did not break the last lower high that it had created, and then it ended up creating another lower high. And when price came back below 40.54 the second time, that was my entry, and I entered from around here. And if I'm going to be completely honest with you guys, I myself was not sure about this trade, and that is because of how messy price was moving this week, right? But my setup was clear, and now we had two lower highs in the market, which gave me more confirmation to enter this trade. But instead of putting my stop loss down here at the new lower high that has been created, I decided to put it up here at the previous lower high that was created on the 1 hour time frame. And my target was down here. And as you can see from this screenshot, this is where I entered this trade. That is where my stop loss is, and that is where my take profit is. So when price came back above 40.54, it ended up hitting a lot of your stop losses. But if you look at this clearly, price hit the stop losses, but still did not break above this lower high that it created, which then created another small lower high. And when price came back below 40.54, the third time, that is when I added more positions to my trade. And that's when I ended up moving my stop loss from up here all the way to down here, because then I was confident that price was not trying to go any higher than this. and I decided to add more positions to this trade because price had already given me another confirmation while my original trade idea was still valid. So remember, I had already entered and price gave me another confirmation, and when it came back below this zone, that is when I decided to add more positions. Price consolidated for a while, but the sellers ended up kicking in and pushing price to the downside, which we then later on hit TP down here. And if you look at it from the 4-hour time frame, this is exactly how it looks on the 4-hour time frame. My stop loss was up here for the first time, which meant I did not get stopped out when price had all this bullish movement. And then when price came back below 40.54 for the third time, that is when I added more positions to my trade, and then I moved my stop loss from up here all the way to down here. This was the before, and this was the after of the trade. So I have 2 good lessons that I learned from this trade. Lesson number 1, trust your setup. The setup was clear. We had an indication to the downside. We had a correction. This was our entry when price came back below 40.54. So if you go down to the 1-hour time frame, which is the time frame that you use to enter your trades, this was my entry, and my stop loss was just above the previous lower high that price had created. And when price came back above 40.54, wicked a lot of people out, but it still showed me that it respected this level because it did not break above this previous lower high that it created. And then when it came back the third time, that is when I added more positions to my trade. I then moved my stop loss from up here to this new lower high that had been created because price had already showed me it is not trying to go any higher than this. So lesson number 1 is trust your setup. Trust yourself, trust your strategy, trust your setup. Lesson number 2 is going to be messy doesn't mean you're wrong. Just because price is moving messy doesn't mean your setup is wrong. Not every winning trade is going to be clean and clear. All you have to do is trust your setup and be patient. Lesson number 3 is going to be that stop loss placement and risk management is really important. When I entered this trade the first time, my stop loss was up here. This might look like a big stop loss to some of you guys, but based on my account size and the risk management that I follow, it was very much okay for me to put my stop loss up here. And I knew that if price was to come up here and hit my stop loss, that would have meant that my trade setup would have been invalid. I should have used this one, but I've explained to you guys, price was very uncertain. So instead of using this lower high, I decided to use this lower high because I knew that if price was to come back up here and hit this stop loss, that would have meant that that trade setup was invalid. And when price ended up respecting this lower high and coming back below 40.54 for the third time, I realized that price is also not trying to go any higher than this. And that's when I moved my stop loss from up here to down here. And I added more positions, which ended up giving me a 1:4 risk to reward. So 3 lessons from this video. Trust your setup. Messy does not mean you're wrong. And stop loss placement and risk management is very important when it comes to trading. So that's the breakdown of the trade. If you found this video useful, please hit the like button, subscribe to the channel, and I really hope this video helped answer any questions that you guys had about this trade. If you have any more questions, leave them in the comment box below and I'll get back to you guys. Thanks for watching. I'll see you in the next one. Peace.